Okay, in this lesson, we're going to talk about time frames that you can trade. So the title of the lesson is Finding Your Time Frame. What can you trade? The reason I put this together is because a lot of people see a lot of videos on YouTube, a lot of people trading different symbols, different time frames, different strategies. And it's easy to be led as a trader down a specific route because you've been enticed into a specific strategy, style of trading, or platform by the rewards that you're going to get from that style of trading. And unfortunately, that isn't the case, because a lot of people who are working 9 to 5 are just not going to be able to achieve the same results, because the people that are achieving those results have more time available or have the ability to trade at different times of day when those strategies are going to be effective. So the other thing that you need to consider with picking your time frame and how you're going to trade is whether or not you have the capital to trade a specific time frame or strategy as well. So the first part of this, as you can see on the screen here, is time frame analysis. What we're going to do is we're going to have a look at the different time frames, and we're going to start off with looking at the difference between prop and trading with your own capital and what you can do, basically. But the end result of this is that you should have a clear understanding of the ideal time frame for you personally as a trader, and that will also lead to realistic outcomes you're going to get from strategies, and realistically what strategies you can trade. So if you love the idea of scalping the open of the New York indices using the opening range breakout strategy, which is one of the strategies that I use, but you work full time, you're not going to be able to do that strategy unless you're using automation. So you need to understand what you are capable of as a trader, and therefore start to trade and focus on those timeframes that you're able to trade and the strategies that you can trade. So starting off here, prop versus your own capital, what can you do? So the reason I've included this in this part of the course is to give you an idea of which direction to go when you've learned all the basics, all the fundamentals. If you have a pot of cash or a pot of capital available, say $5,000 or $10,000 that you want to trade with, that opens a lot of doors for you as to the type of trading that you can do, the different symbols you can trade, and the different ways you can trade, either with automation or manual trading. So for example, if you want to be a position trader because you want to do long-term trading and small growth, which is more sort of guaranteed, if you like, over longer periods than sort of scalping on the indices, you can do that if you've got a lot of capital. If you've only got $1,000 to start trading with, you're going to find it very, very difficult to make any meaningful revenue with that, because you're only going to realistically generate somewhere between 5 to 15% per month on that. So if you're happy generating $100 a month, for example, with your $1,000 account, that's absolutely fine, but that's not what most people want to do. So your time is better, or your money is better invested maybe in going down the prop route, because that is going to buy you more capital for your money. So you need to decide whether or not you're going to trade your capital and actually trade on your capital, or you're going to use the capital you have for trading to buy more capital with prop firms. And they are very, very different approaches to trading. So that brings us into the time frames you can comfortably watch and react to. So this is going to be the main focus of what decides what you as a trader are able to trade, whether you can trade prop on futures, or whether you can trade prop on CFDs, or whether you trade with your own capital. Those are really the three options you have available to you. So what timeframes can you comfortably watch and react to? This comes down to what you can do on a daily basis as a trader. So if you are working a 9 to 5 job, and that 9 to 5 job, if let's say, for example, you're in the UK and you start at 8:30 in the morning or something, you leave your house and you have to go to work, and you come back from work at 5:30 in the evening, you're going to not be able to really trade the European Open at 8 o'clock, because you won't have enough time to put into it before you have to go to work. You're going to be at work while the New York Open happens, where all the stock indices move, where we can trade and scout those stock index movements, which are explosive. And then by the time you get home, everything is calmed down and there's no opportunities on low time frames on stock markets. So you cannot realistically trade the futures markets, and you cannot realistically use opening range breakout strategies on anything else. So that limits you as a trader to trading what you can. And that is going to come down to literally Forex markets trading higher time frames like 4-hour and daily charts. So that's one of the constraints that you're going to have as a trader. And you need to think about what you can realistically do, how many hours you can put in. So these are the time frames that are realistically traded by most people, and what we kind of compartmentalize different strategies into. So scalping, it tends to be 1 to 15 minute time frames. You need to be in front of the charts. You need to be watching candlestick patterns for signals to enter. And it's a very fast time frame where you get lots of signals, lots of false signals, and lots of stop outs. So it's quite mentally challenging. It's very, very difficult for most traders to nail the 1 to 15 minute timeframes within the first sort of 3 or 4 years of their career in trading, because you need to understand price movement and read candlestick patterns to be able to successfully make money, usually on those timeframes. Unfortunately, this is where most prop firms are going to force you to go, because they're going to force you into trading indices and trading intraday, which means you need to be in and out within hours and close by the end of the day, specifically in futures. So if you're working full time, those time frames are really out. Day trading is the 15-minute time frames up to kind of 1 day, really, but you're holding those trades in day trading initially for multiple hours within a day, but you can also hold them overnight. With this, you've got less time constraints. If you can check your charts maybe every kind of 1 to 3 hours during the day. So let's say you work from home, or you've got a job that allows you to have 2 or 3 breaks a day where you can check prices on a laptop or something. That opens up a lot more doors to you. But realistically, you're going to be trading on mainly Forex markets with those timeframes. So you need to be looking at strategies that are sort of triggered on the 15-minute hourly charts, possibly 4-hourly charts, where you can get in when you see something happening and then check it 3 or 4 times a day and then get out by the end of the day, or possibly even hold it overnight. Swing trading is your longer term strategies. So these predominantly work on the hourly and 4-hourly time frames. And these are more like your sort of low-end position trading strategies, where you're going to be able to check the charts every kind of 3 or 4 hours, or every 4 hours ideally. So 2 or 3 times a day, maybe once before you go to work, once at lunchtime, and once at the end of the day. That's all you're realistically going to need to do. And you're going to be able to see if there's any signals and enter those trades. And because you're trading hourly and 4-hourly charts, what you're going to find is that the markets will move a lot slower on those time frames, meaning you don't have to react as quickly. So if we go over to a chart now and have a look at an hourly time frame, for example, you've got obviously 24 candles in a day there. So if you're using a strategy where, for example, you're looking at a relative strength index indicator, for example, and this is your condition indicator to take a trade, if you check on the hourly time frame once every 4 hours, you're going to realistically see this thing for most of the day sitting up there. So your reaction time up there is slow. You don't have to react very, very quickly. When you're getting in, you're giving trades a lot more distance to move because of the size of the candlesticks. So you've got a lot more movement constraints, or movement freedom, really, for the market to move around during the day. So by the next time you come to check the charts, maybe 4 hours later, you can see whether you're in profit, but you will also have maybe a position that you want to get into up here, or you might get stopped out, but you're not going to have to react to it on a 15-minute or an hourly basis. You can check it in periodically during the day. So they work really well for balancing work and trading. So if you're looking to make a partial income from trading and not go full-time initially, that's the type of trading you should really focus on. So looking at things like support and resistance, bounce plays, looking at trends and pullback in trends, and entering on hourly signals. So For this, for example, here we've got a nice trend going on the NASDAQ. So looking for pullbacks to enter into long trades, and you're only really going to get 1 or 2 maybe signals a day. So you don't have to react very, very quickly to those. And you can set up automation as well so that you can have email signals sent to you, or you can periodically check within the dashboard here, for example, and go over to the indicator dashboards and just see what is set up now and have a quick look at charts and really spend half an hour analyzing them and looking for opportunities to enter into trades. We then look at position trading, and this is available pretty much to everybody. Position trading is one of my core strategies where we are basically scaling in and out of market movement as banks and institutions do. And with this, it's kind of a long-term approach. So you'll be entering using either hourly or 4-hourly charts, and you will be holding those trades for days, weeks, and potentially months in some cases, although that's a lot rarer. So position trading is really suitable for pretty much anybody, and this is where I usually say for people to start if you have a full-time job, because you really can trade the 4-hour or daily charts very, very easily. If we look at a 4-hour chart here, this is an entire week we're looking at here. So you could check the charts in the morning, say at 7:30, wake up, check the charts in your bed, see if there's any signals ready to go. If there is, take a trade. It takes literally 15 to 20 minutes to have a look through the charts and check them. Then you check at lunchtime, somewhere around there, and then you check at the end of the day. And you just repeat that process throughout the week, and you'll probably find you're only going to look at the charts 2 to 3 times a day maximum. You can even do this just once in the morning and once in the evening. And then during the day, the UK session, the New York session all plays out, and basically you can react in the mornings and in the evenings. So that's a great time frame for everybody, the 4-hour chart. But it's all going to be related to what you are able to do. Now, the other part that you can do with prop, if you've got limited capital available to you, if you are not able to be in front of the charts and scalp these opening ranges and opening movements on stock indices in futures, you can trade CFDs. So, for example, here I've got the opening range breakout EA working on a CFD account, and this is automated fully. So you can run this on full automation and go to work. So this will sit on a VPS computer and basically will take the trades for you during the day. It's not ideal. Ideally, you would want to be monitoring this and seeing, you can see there's a lovely support I drew in this morning. We've had a 3-bar reversal price action reaction at it. If you're not able to watch the charts, you're not able to act on those particular things that happen during the day. But EAs will allow you to trade CFDs on futures and scalp the markets on 5-minute timeframes when you're not at your computer. So there is that option also available to you. And the amount of capital you've got really is going to determine what you're going to be able to do. If you've got $1,000, forget making $300, $500, $1,000 a month. It's not realistic. You're going to make roughly 10% on average a month. That's most traders' target, and that's what most traders are capable of doing, regardless of the time frames that you're trading on. Some traders can make more than that. It depends on the amount of time you spend in front of those charts. But if you're going to spend a lot of time in front of the charts, it means you haven't got a day job, basically, does it? And that's really full-time trading. So for most traders starting out, you're looking to make a part-time income, or you're looking to trade sort of either additional income, or you're looking to build a portfolio slowly and make long-term profits, maybe for buying holidays and things. So these are the timeframes most traders are going to be focusing on. During the course, we're going to break off into different areas. So in the course, once you've gone through this 101 sort of everything everybody needs to know, you can then go off into the different types of trading that are available. So prop trading, you can do that on CFDs with automation or on futures, and obviously be in front of the charts. So you can do both, or one or the other. But if you've got a full-time job, that's going to be a lot more difficult for you to do. The position trading bootcamp is going to be much easier for you to do, because you can really do that on full automation. You don't need to be in front of the chart. So you can either trade it manually once in the morning and the evening and maybe at lunchtime, or you can just let full automation trade it for you and just check your charts twice a day. So you need to make that decision basically before you go further, ideally into the course, as to which direction you can realistically go. As we go through the Trading 101, you're going to come across lots of other things we're going to discuss about different types of strategies. And a lot of these strategies that we're going to go through, support, resistance, candlestick patterns, market structure, you can trade on any time frame. The markets are fractal, which means that they move the same way on all time frames. You're just going to get more reliable signals on higher time frames, which is why I recommend people start on higher time frames. But as we go through, you're going to get a lot of strategy ideas revealed to you, and they will all be able to play out on any of these time frames. But your decision-making process right now is, what realistically can I do? Which of these do I want to focus on? And I would advise you focus on just one initially. Because if you're trying to do day trading on futures, you're trying to do position trading, you're trying to do swing trading on trends, and you're trying to be a support resistance bounce play trader with mean reversion, you're just going to get yourself into a mess. Take it one step at a time and choose one strategy to focus on, and then break out and concentrate on that. So moving into the personal assessment, this is kind of a little checklist really of what you need to do to decide. So look at the time availability and schedule constraints. That's really going to be down to work at the end of the day. Have you got time available to trade? If so, when? And that will decide what type of trader you're going to become. Your risk tolerance and capital requirements. If you have $2,000 available, or £2,000 or whatever it is available to you in your savings account, and that is all you have, and if that is gone, it's going to be a problem, that's too much risk. Okay, so you need to be aware, obviously, every penny you put into trading is at risk. So your risk tolerance may be better putting it into prop. So if you've got £2,000 or $2,000 or whatever it is to spend, and you can do a proper valuation for $100, your risk is only going to be $100 at any one time. That's also going to buy you more capital, so you can decide which way you want to go. Your capital requirement, obviously, if you're doing position trading, is going to need to be larger. If you're swing trading, is going to need to be larger as well. So just bear that in mind. Personality traits that match different styles. This is something that's important, and you're not going to know until you've tried different strategies. There are different people in trading. Everybody is unique and everybody is different. A lot of people are really good at scalping because they've got that focus and that drive, and they can really get in sync with the market. Other people look at the market and they panic, they revenge trade, they overtrade, and they trade emotionally. Until you've tried scalping, you've tried day trading, swing trading, and position trading, you are not going to know what personality traits you have that are advantageous or disadvantageous to those individuals' types of trading. So I would say you need to try everything if you can. Now, if you are an emotional person, this is going to be tough, because half of the battle with trading is controlling your psychology and controlling your emotions. A strategy is very easy to execute. Yeah, a back test is very easy to do, but executing a strategy and deciding whether or not to take money when it's available to you or not is very, very, very difficult for us as human beings. It's like a shiny thing. When we see it in front of us, we want it. We want to take it. Unfortunately, what that does is ruin most people's risk-reward ratios, and everything goes wrong. So this is something that is going to be revealed to you over time. If you know you panic at everything, this is not going to be for you unless you can fully automate it. And this is one of the things I would say for everybody they should focus on, is trying to automate as much of their trading as possible, because it removes the emotional element from your trading. And we will cover that a lot more in the course. Technology and monitoring requirements. So this comes down to basically what you have available to you to actually check your charts. And this is kind of what I was saying. If you're at work and they're a little bit flexible and you can have a look at your laptop every 3 or 4 hours, brilliant. You have the availability to maybe do day trading, definitely swing trading and position trading. If you work 9 to 5 on a building site and you've only got your mobile phone, you're not going to be doing that. You're not going to be doing that. That's going to be pretty tricky. That, no problem at all. So think about what you have available to you in your day-to-day life to be able to become a trader. And that really is going to limit what you're available to do, isn't it? So there's your personal assessment. Take your time to have a look at these elements and think about what type of trading is available to you and how best to use your capital, and sit down and spend a couple of hours thinking about short term now and long term where I want to be in 6 to 12 months time, and decide which route you're going to take. Because when you're going through and learning new strategies or learning new things about the markets, you have to be able to visualize how you're going to apply it to what you're going to do as a trader. Okay, so that's the end of that lesson. Finding your time frame, what can you trade? So hopefully that's been useful. And now you can progress obviously into the more detailed area of the 101 course, which is going to teach you much more about how the market moves and how to execute strategies.